Welcome to your market update. My name is Arora and I'm a realtor with Samson Properties based in the DC metro area. What I want you to get out of today's videos is a few things. First, we'll recap how December went across the DMV by the numbers. Then we'll cover what are some of the hottest areas right now based on county and zip code. And lastly, we'll look at 2025. What do I think the DMV is going to look like given the micro and macroeconomic factors? All right, so let's get into the December activity. In the month of December, across 8 select counties in the DMV, we performed $7.44 billion in sales. Billion with a B. This is down just a shy of 6% from $7.91 billion from last month. Now, keep in mind, we are in holiday season. Not everyone is jumping joy to buy and sell a home. We could see this from the drop in net new listings from November to this month. And even the number of homes that went under contract from 3683 to 2135. Now, apart from just holidays, you also have, or you're coming out of an election month, which was last month, believe it or not. And on top of that, the cost of home ownership has increased. So you can imagine there's just general uncertainty looming in the air. Now, one thing to keep in mind is the inventory right here, right? This is the current month inventory. Now, according to Bright MLS, where all of this data is sourced, we have about 2 months of inventory. A healthy market, or rather a more balanced market, is anywhere from 4 to 6 months. So although the listings and everything slowed down, we are stockpiling more homes, which gives people a little bit more options when they're looking to buy a particular home. All right, now that is more general, right? What I have here is something based on more counties, right? I mentioned 8 specific counties where I got this data from. Now, we can get into these specific counties. I won't run through each and every single one of them, but there are a few trends I want to call out, specifically with Fairfax County. Keep in mind, Fairfax County alone is pulling over $1 billion in sales, even though it is down from last month. However, the median price did go up by $2,000, but still it went up, and that's worth noting. Another market that really kind of surprised me was DC itself. Across all the markets, DC was the only one that had higher sales than the month prior. This also is reflected in the median price. Again, these are more marginal increases, but they're increases nonetheless when everything else is starting to downtrend. Depending on which area you're currently living in or which area you're interested in, I'm happy to share this with you. If you're tuning in to this video from my newsletter, you should already have the link. But if you're watching this directly on YouTube, I can send this over as well. All right, let's get back into the second section here, which is the hottest areas right now. Keep in mind, this is a little bit more general, but we do have the ability to dive deeper in the specific zip code, the specific city. You just have to reach out and we can dissect this information. But overall, we'll see right here the home demand index. HDI is, you can see, it tracks pre-sale activity to measure the level of demand in a given area. Pre-sale activity includes how many showings am I really seeing in my given listing, or how many views online, whether it's through Zillow, whether it's through MLS, what have you. But essentially anything prior to a sale measures this home demand index. And you can see across the DMV, it's largely steady or slow or limited. But let's dissect this data a little bit more. Let's go into DC Metro here. Some of the areas that I personally saw that were really seeing a lot of traction let's go into Fairfax. Now, even though we saw a decline in sales from this month to last month in Fairfax, Keeping in mind over $1 billion of volume, we're seeing areas like Falls Church, Fairfax, Alexandria, which keep in mind, Alexandria falls in Fairfax County, but part of Alexandria also falls in Alexandria City. You'll see Alexandria again. So within Fairfax County, these are some of the hotter markets. Arlington, let's be honest, I personally live in Arlington, and Arlington's a great market. There's always demand. You have that proximity to DC, and some of these zip codes that you see here, these are areas like Crystal City, Pentagon City, so on and so forth. Even Ballston area out here is starting to see moderate activity. DC, you'll see mostly steady or slow. Alexandria City, moderate traction. Falls Church City, very limited. You'll see Prince George's County, this area, Aquasco, has quite a bit of demand. Other areas, as you could still see, very steady and slow. But you get the idea. These are some of the major areas that are hot right now. Falls Church, Alexandria, parts of Arlington, and these areas will probably continue to see demand even going into the new year. If you ever look through those county breakdowns, you'll see specific markets and the whole inventory coming up versus how many sales versus the median price. And you can see some that are lower in the median price are naturally seeing more demand. Wonder why? Because cost of homeownership's gone up. Anyways, that's a separate tangent. But let's get back into the slides and talk about how I think 2025 will look. All right, so this year itself, the Fed cut interest rates 3 times. This is after 4 years of not doing anything, right? So the last time prior to September, the rate was at 5.375. You then have a 50 basis points cut in September, which actually people reacted well, right? There was more demand for a mortgage because the mortgage rates had gone down. In October, rates were kept the same, but in November, when the Fed cut interest rates again, the mortgage rates actually went up a little bit. And then come December 18th, when we did another quarter basis point cut, mortgage rates again did not really react that well. As you could see, people think that mortgage rates and the Fed interest rate cuts are typically tied together. I can understand why, right? Because the intention with a Fed rate cut is to make it cheaper to borrow money. If it's cheaper to borrow money, that means we want to stimulate the economy. Clearly, mortgage rates are still stubborn here. So here's my hot take. I think rates will stay largely the same as they were in 2024, between that 6.5% to 7% range. Even with the 2 anticipated Fed rate cuts in 2025, that's only going to impact short-term lending. It'll probably see a little bit of a dip where buyers will have this confidence, will come in, and will ultimately drive the price of a home. Keep in mind that mortgage rates are primarily driven off of 10-year Treasury yields, meaning it's looking at a longer time span. All this to say, with rates being largely the same, home prices may go up for a little bit, but depending on the area and keeping in mind the home demand index, some areas will probably see a minor price increase, but largely with inventory stockpiling up, buyers may have more options with more inventory. That means sellers, depending on the market, you could see price cuts, you could see seller concessions, but ultimately it all depends on how well priced a home is. So if you're a seller watching this, we should probably talk about what demand looks like in your area, apart from standard comparables, just to see, is your home worth selling? If you're a buyer, I get asked all the time, is now a good time to buy? It really depends on your situation. It depends on your intent, your financials, and your timeline. So if you're a buyer watching this, let's have a conversation. Let's do that full audit and really see, what does your roadmap look like to purchasing a home? I hope this was helpful in this kind of consolidated market update. I'm going to try to do more of these, but follow me on socials, subscribe, And if you have any questions, don't hesitate to reach out. I'm happy to share any information that will help you in your real estate journey. Thank you.